Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of previous monthly resistance, which is now turned support. In fact, from here, all this previous move to the downside was created, and at the moment, since the market has broken back above the zone with the creation of this impulse, this previous resistance is now turned support. So as the market is testing this previous resistance turned support, we could expect more bullish price action to be created away from this area. Now, if we zoom in, we can also notice how, in general, since we have the creation of an impulse and correction, if you want to measure the correction after an impulse, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a perfect 0.32 Fibonacci retracement lining up with this previous resistance turn support, creating confluence of support at this level, which we could in fact expect this market to test and then to reject to the upside. Going down on the weekly time frame, what do we have? Well, from a weekly perspective, it is quite clear how precisely the market was respecting this area. First as resistance, also here with the creation of this red candle, and then as support after the market broke above the zone and retested it exactly here. So at the moment, this market is rejecting previous weekly resistance turn support, so more bullish price action could be expected away from this area. Going down on the daily time frame, this is where things get very interesting. Now, I did speak about GBPUSD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside again after this impulse and correction from here, explaining all the reasons for which we could expect the creation of the higher high. And also here, I explained what we could expect the impulse, then this correction, and then from here, more bullish continuation, which is in fact exactly what the market just gave us. And by the way, I will link in the description all these previous analysis so you can go and check them out for more free education. However, what we can notice is that at the moment, as the market has just created a new daily higher high, what we could expect at this point is a potential retest of this previous daily resistance turned support, because from here the market had created this move to the downside, meaning that this previous resistance, now that the market has broken it to the upside, is turned support at this level. So what we could expect is a potential retest of this previous resistance turn support before then getting a potential rejection to the upside. We can also notice how, in general, since we have an impulse and the start of a correction, if we want to measure this correction, what we have to do is take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a perfect 50% retracement lining up precisely with the previous resistance turn support, creating confluence of support at this level, which we could definitely expect this market to want to go and test to see what kind of liquidity we have in the zone and then reject to the upside, because this one here, this confluence of support area, is a quite probable zone inside of which institutions might want to be adding more longs and close more shorts. Now, why do I say this? Because if we go and see what we have when it comes to the commitment of traders, so what the institutional side of the market is doing, and we look at the data precisely for the pound, the first thing that we have to keep in mind is that if we're checking the data for the pound, we're actually already checking GBPUSD, because all currencies on the spot are traded against the USD. And what we can see is that net positions have been shifting from negative to positive with the last reports. In fact, We went from having minus 24k net positions, meaning that from an institutional perspective, we had more shorts than longs, with 52k shorts compared to only 28k longs, all the way up to currently having a positive net positioning of plus 12.4k net positions, with 65k longs compared to only 52k shorts. This shows how institutions were getting very bullish on GBPUSD, increasing the probabilities that on a retest of this previous resistance turn support, the market could definitely be potentially rejected to the upside. So if we get a retest of this previous resistance turn support, how we could be approaching a potential move higher, since we know that there is a good probability that institutions might be adding more longs in this area. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you joined the mentorship program directly from your student dashboard, you open a trading account with them and essentially move your trading there, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price goes back to normal, and directly from here there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in description. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.